Okay, so good afternoon, class. So we will now proceed. We will now continue with our problem solving. So for the first problem, Louis' shop had cash flows from investing activities of 2,567,000 and cash flows from financing activities of 3,459,000, and the balance in the firm's cash account was 950,000 at the beginning and 1,025,000 at the end. So we need to compute for the cash flow from operations. So, di ba, as we have discussed last meeting, meron tayong 3 components ng ating cash flows. That is your operating activities, investing activities, and your financing activities. So, given yung dalawa, ang wala lang is si operations. So, we have to plot this in a pro forma cash flow statement. So, Louis shop. Magkano ang ating cash flows from operating? That's unknown. Investing. How much is investing? We have 2,567,000. For our financing activities, we have 3,459,000 pesos. We have our cash beginning of 950,000. Cash end of how much? 1,025,000. So how much is our change in cash? That's just cash ending less cash beginning. So 1,025,000 less 950,000 beginning, 75,000 ang ating change in increase in cash. So increase. Now, we need to determine whether the financing and investing cash flows here are net cash inflow or net cash outflow, but the problem is silent. So, for financing, we assume that this is a net cash inflow. Why? Because what usually involves our financing activities, it involves loans and equity. So, we either borrowed or secured another investments from our shareholders. So, financing, this is a net cash inflow. And for our investing activities, what does it usually involves? It usually involves acquisition of long-term assets. So our presumption here, since the problem is silent, is that this is a net cash outflow. Net cash outflow. Now, we can work back. So, I said, when you work back, you have to reverse the operation. So, 75,000 increase in cash. What do we have to do with our net cash inflow? We need to deduct this. Why? Reversed. Less 3,459,000 plus our net cash outflow in investing activities of 2,567,000. We get a negative 817, meaning net cash outflow for our operating activities. 817,000 net cash outflow. Okay? So, let's move to number 2. Ayan. You are considering an investment in East Corporation and want to evaluate the firm's free cash flow. From the income statement, you see that East Corporation earned an EBIT of 62 million and paid taxes of 17 million, and its depreciation expense was 5 million. Fixed asset increased by 32 million from 2011 to 2012, and the firm's current asset increased by 20 million and spontaneous current liabilities increased by 12 million. Calculate is corporations, operating cash flow, investment in operating capital, and free cash flow. So going back to the concept of free cash flow. So when it is positive, what do we say when we evaluate the firm's free cash flow? If it is positive, then it means that the firm is able to generate more than enough cash to finance current investment in fixed asset as well as in working capital. While if it is negative, then it means that there is an insufficient funds of the company to finance the investment in fixed asset and working capital, which necessitates that the firm raises new money. And when we raise new money or capital in a firm, we have two ways, either debt financing or equity financing. So pag sinabi natin debt financing, di ba, from the word itself, di ba, you borrow money. This is in the form of loans, bonds, and the like. And when we say equity financing, it involves shares. So you you sell additional shares to the investors, shareholders. Okay. Now, let's compute. So, anong sabi? Meron tayong EBIT of 62 million. EBIT, 62 million. What else? Meron daw tayong tax paid na 17 million. Therefore, magkano ang ating earnings after tax? We have 62 less 17. That is 45 million. And meron tayong depreciation na 5 million. So, we have our operating cash flows na 45 plus 5, that's 50 million. This is our operating cash flow. Why did we add depreciation? Because it does not form part of our cash outflow. It was deducted in your EBIT. When you compute your accounting income, it was deducted. However, there is no actual cash outflow. Kaya ina-add natin siya to get our operating cash flow. Now, anong next? Investment in operating capital. Sabi niya, the fixed assets increased by 32 million and the firm's current asset increased by 20 million while the spontaneous current liabilities increased by 12 million. So, how much is our investment in operating capital? We have our, change in fixed asset of 32 million. We have our change in NAUSI, which is the difference from our current asset and current liabilities. Since there is no given notes payable or excess cash, then it is the same with your net working capital. So change in NAUSI is 20 million less 12 million, that's 8 million. So we get 40 million pesos investment in operating capital. And next is our free cash flow. So, our formula for free cash flow, as we have already shown, ayan, kikita, ayan. Last meeting, that is your operating cash flow less your investment in operating capital. Na-compute na natin yung ating operating cash flow and investment in operating capital. So our FCF or free cash flow is less investment in operating capital. So we have 50 million operating cash flows and investment in operating capital of 40 million. So very easy, you get 10 million na free cash flow. Itong ating operating cash flows, just to emphasize, ito yung nagpa-form part ng EBIT times 1 less tax rate plus depreciation. Kaya 'di ba? Ayun na yung yun na yung una nating kinompute. And yung ating investment in operating capital, ito yung ating capex plus change in NAUC na siya rin ginawa natin dito. So, we move to problem number 3. So, Tiffany Corporation reported free cash flows for 2012 of 23 million. Ayan, guhitan natin. And investment in operating capital of 13 million. The firm listed 8 million in depreciation expense and 17 million in taxes in 2012 income statement. Calculate the Tiffany's Corporation's 2012 EBIT. So how do we do that? I-plot natin ulit ang ating formula for free cash flow, that is operating cash flows less investment in operating capital. And magkano yung ating free cash flow? Sabi niya, meron daw tayong 23 million. Ayan, 23 million. Meron din tayong investment in operating capital na 13 million. So, how much is our operating cash flows? Very easy. You just need to transpose 23M plus 13M. You get how much? 23 plus 13, that's 36 million operating cash flow. Pero ang hinahanap natin is your EBIT. So, ano na nga ba yung ating computation ng, we need to work back. So, since we get our operating cash flows, let's plot this in the bottom. OCF, ilan yun? 36 million. We have EBIT, yung ating hahanapin. We remove tax, we deduct tax to get our earnings after tax. And we have to add your depreciation to get your OCF. So we need to work back from our operating cash flows which we have computed initially. So magkano ang ating depreciation expense? That is 8 million. So how much is our earnings after tax? That is 36 million less 8 million na depreciation. You get 28 million. Bakit tayo nag-deduct ng ating depreciation? Because we reverse the operation. Pag nag-work back tayo, how much is the tax? 17 million. So 28 million plus 17 million, you get 45 million na EBIT. Okay? So that's very simple. You just need to work back, and when you work back, you reverse the operation. Number 4. O ito, pinakamadaling problem. Calculate the beginning of the year balance for long-term debt. Janice's company has net cash flow from financing activities for the last year of 20 million. The company paid 105 million in dividends last year. During the year, the change in notes payable balance was 23 million and the change in common and preferred stock was 0. The end year balance for long-term debt was 185 million. So how much is the beginning of year balance for long-term debt? So given na ang ating ending, long-term debt of how much? 185 million. Kikita ba? Ayan. Magkano yung change? In notes payable, we have a payment of 23 million. Diba? Nagbayad siya. So, magkano ang ating beginning? You just work back. That is 185 plus 23. 208. 208 million. That's the answer. Very easy. Okay. Okay, so we now continue with problem number 5. Ano yung ating hahanapin? The free cash flow and to fill up the income statement. Gabriel Corporation reported that the change in net fixed asset on Gabriel's statement of financial position during 2012 was 10 million. Change in net fixed asset. And the change in net operating working capital was 14 million. So first, mag-fill up muna tayo ng ating income statement. This is very basic. So for our net sales, you just add from your gross profit yung cost of goods sold, that is 31.5 plus 75.6, you have 107.1 million. For your EBIT, that's 31.5 no gross profit less your depreciation, you get 25.5 million. Ayan. Now, meron bang sinabi sa interest? Walang sinabi ang problem, di ba? Therefore, it's 0. So, how much is your EBIT? Just the same. EBT, that's just the same with your EBIT since there is no interest. And your tax is 25% of your EBT, that is 25.5 times 0.25 na tax rate, you get 6,375,000 pesos. And your net income therefore is 25.5 less 6.375. You get 19,125 million pesos. Now, we compute for your free cash flow. Last meeting, sabi natin, ang free cash flow is equal to your EBIT times 1 less tax rate plus your depreciation and amortization kung meron, less your capital expenditures, plus your change in net operating working capital. Ayan. The first portion is what we call your cash flows from operating, and the second portion is your investment in operating asset. Okay. So let's compute for your free cash flows. You have an EBIT of how much? 25.5 million. Your tax rate is 25%. And your depreciation is how much? 6 million. How much is your capex? Kailangan nating hanapin. Sabi sa problem, meron daw siyang change in net fixed asset of 10 million. So, paano? Saan part? Dito na lang. Change in net fixed asset is equal to your capex plus your depreciation. Diba? So, how much yung change? We have 10 million. Your capex, wala pa. And your depreciation is 6 million. So, you just transpose 10 million plus your 6 million na depreciation. Now, how much is this? You get, no-brainer, 16 million. Ayan. Ayan. So, we already have your capex na 16 million pesos. And how much is the change in NAUSI? Meron tayong 14 million. Okay. We can now compute. 25.5 times 0.75, you get 19.125 plus your 6 million depreciation, less how much? 16 plus 14, you have 30 investment in operating asset, 30 million. So how much is your FCF or free cash flows? That is 19.125 plus 6 million plus 30 million. Uy, less 30 million. 19.125 plus 6 million less 30 million. You have a negative free cash flow of 4.875. 4.875. 4,875,000,000 negative. Pag sinabi nating negative ang ating free cash flow, ano na nga ang ibig sabihin nun? It means that merong insufficient funds ang ating firm to finance investment in fixed asset as well as in investment in working capital. Kaya kakailanganin ni firm mag-generate ng additional money, ng new funds. Okay. So, is it always bad kapag meron kang negative cash flows? Hindi, not necessarily. Provided that yung investment in your capital assets will later redound to profit. Okay? So, we move to problem number 6. What's problem number 6? ABC Manufacturing Corporation reported, nasa EVA na pala tayo, the following information for 2025. You have EBIT of 5 million, tax rate of 30%, total asset of 40 million, and non-interest-bearing current liabilities of 8 million, at meron tayong cost of capital, your WACC, na 12%. So, compute for the economic value added. Last meeting, sabi natin sa EVA is equal to your NOPAT less your total investment in capital assets times your WACC or your after-tax rate of cost of capital. Yan yung ating WACC. So, how much is our NOPAT? That is, meron tayong EBIT na 5 million. Meron tayong tax rate na 30%. So, we multiply this by 70%. That's 1 less 30%. You get how much? 5 million times 0.70, 3.5. 3.5 million na NOPA. How much is our total investment in capital assets? In capital, sorry. Bakit capital asset yung nilagay ko dyan? Total investment in capital. Yan. How do we get our total investment in capital? That is your total asset less your current liabilities. Or, pwede ring, ito yung ating long-term debts and shareholders' equity. Isulat natin para clear. So, dalawa yan. It's either your total asset less current liabilities or ito yung ating long-term debts plus your shareholders' equity. Yan ang ating total investment in capital. So, how much is our total investment in capital? That is 40 million less current liabilities na 8 million. You get 32. Tama? 32 million. 40 less 8. 32 million times magkano yung ating WACC? 12%. So, how much is this? Your EVA is 32 million times 0.12, we have 3,840. 3.5. So, 3.5 million less 3,840,000, you get an EVA of negative 3.5 less 3,840. Negative 340,000. And what does it mean kapag meron tayong negative na EVA? It means that there is a value destruction. Is that good? Syempre hindi. Bakit? Because the goal of the firm should be to maximize the shareholders' wealth. And that is represented when we have a positive EVA. In this case, we have negative 340,000. We move to problem number 7. Delta Trading Corporation reported the following for 2025. Net operating profit after tax NOPAT of 8.4 million, total asset of 70 million, non-interest bearing. Current liabilities, take not current na naman yung given, 14 million, and weighted average cost of capital na 10 million. So, compute for the EVA. Again, ano yung ating formula? EVA is equal to NOPAT less ating total investment in capital times the WACC, or your weighted average cost of capital. How much is the NOPAT? It's 8.4 million. Less ang total investment in capital natin na how much? That's total asset less your current liability. 70 million less 14 million. 56 million times your WACC na 10%. So how much is this? 56 million times 0.10. That's 56 million times 0.10. You get 5.6 million. You deduct that from your 8.4 million na NOPAT. You have an EVA of 8.4 less 5.6 million. You have an EVA of 2.8 million. Okay? Clear naman siguro, ano? Basta you have to remember that in order to get for your total investment in capital, that is your total asset less your current liabilities or your long-term debts plus your shareholders' equity. Now, problem 8. Konti na lang. Compute for the EVA. Prime Electronics Incorporated provided the following information. For 2025, EBIT of 12 million, corporate tax rate of 25%, long-term debt, ayan, long-term debt of 30 million, and shareholders' equity of 20 million pesos. And we have a WACC of 11%. So, anong una nating hahanapin? You need to find for your NOPAT. That is your EBIT times 1 less tax rate. So, magkano yung ating 1 less tax rate? 1 less 0.25. You have 75%. So, 12 million times 0.75, you get a NOPAT of 9 million. Ito yung ating NOPAT. How much is our total investment in capital? That is either, sabi natin kanina, total asset less current liabilities or long-term debt plus your shareholders' equity. So, magkano itong dalawa? 30 plus 20, that is 50 million. Your investment in capital. Total investment in capital. So, we can now compute for your EVA. EVA is equal to NOPAT less total investment in capital times WACC. Diba? NOPAT, ilan yun? 9 million. Less, magkano yung ating TIC? 50 million. Magkano ang ating WACC? 11%. So, 50 million times 0.11. How much? 5.5 million pesos. Deduct that from your NOPAT na 9 million. How much is your EVA? 9 less 5.5. 3.5 million. Ayan. So, let's move to problem number 9. What does it mean when we have a positive EVA again? It means that the firm is creating value for the shareholders. Problem 9, Alpha Corporation has the following information. Market value of the firm, 120 million, and book value of invested capital, that is 95 million. Compute for the MVA. Napakadali ng ating MVA. That is just your market value less your book value. So magkano daw yung ating market value? That's 120 million less 95 million na ating book value. Very basic, 120 less 95. You get an MVA of 25 million. Okay? Very no-brainer pa rin. Okay. Next. Problem number 10. Apaka-easy, no? Compute for the market value added. Beta Industries reported market value per share of 80 pesos, book value per share of 50 pesos, and ordinary shares outstanding of 2 million shares. How much is your EVA? So, EVA, market value added, MVA. Ano ba yan? Okay, so MVA, that is your market value less book value. And sabi natin last meeting, how do we get your market value? That is your MVPS times your shares outstanding. And to get your book value, that is your BVPS or book value per share times shares outstanding. So, gamit yung ating problem, how much? That's 80 pesos times 2 million shares less, magkano yung ating book value per share? 50 times 2 million outstanding shares. So how much is this? 80 times 2, that is 160? Yes, 160 million. 160 million less 100 million na book value, you get an MVA of 60 million pesos. Okay, very easy. So, shortcut. Diba? Common sense lang din naman yung ating shortcut. Paano? That is just MVA is equal to your MVPS or market value per share less your BVPS times your shares outstanding. So, magkano yung ating MVPS? That is 80. Tama? And ang ating BVPS is 50 times ang ating shares outstanding na 2M, you get an MVA is still the same na 60 million. Tama ba? 80 less 50, 30 times 2, 60 million pesos. Okay. Now, problem 11, your last problem. Ayan. So, compute the market value added of the firm. Gamma Holdings has the following data. Market value of equity, 180 million. Market value of debt, na 70 million. Book value of equity na 150 million. And book value of debt na 80 million. Mahirap ba yan? Syempre hindi. So, magkano? MVA is equal to market value less book value. Magkano ang ating market value? That's just your market value of equity and market value of your debt. That is 180 plus 70. You have 250. 250 million. Magkano yung ating book value? 150 plus 80 million, 230 million. So how much is our MVA? 250 less 230 million, you get 20 million market value added. Okay. Paano ang ating analysis ng ating MVA? We need to look for higher MVA because the higher the MVA, the better. Okay, tandaan mo yon. The higher the MVA, the better. So, that's it. Thank you, guys.